Victoria Scholar joins me now from London. She's a market analyst at IG Group. Welcome to the News Hour. Now, we're coming off historic gains in equity markets in November. Do you see that trend continuing this month?
Yeah, I mean, like you said, November was an historic month, the best November for the Dow since 1928 and the best month for the FTSE since 1989. I mean, we had some major tailwinds to support markets, particularly in terms of the vaccine developments from Pfizer, Moderna. On top of that, we had a win from President-elect Joe Biden, who will replace Trump, as we know, in the White House next year. So certainly we have got that Santa rally. There tends to be some seasonality in the markets. Markets tend to do well towards year end. But in terms of whether we'll get a repeat performance of November's gains in December, I'd say that's unlikely for portfolio managers or investors who were invested in November. It's probably time to take those profits and kind of relax a bit over the holidays.
Right, and some of the warning shots that we're seeing, the US Federal Reserve says the economic situation is still extremely uncertain. Not a lot to keep that rally going there, is there?
Yeah, I mean, it's interesting when you look at how the Fed speaks, there's a sort of a feeling that sometimes bad news is good news when it comes to the central bank, because when the Fed is saying that the economic outlook is uncertain, essentially it's keeping the door open to more stimulus. Now, we get the Fed's next meeting in mid-December. We know that interest rates are already at rock bottom. There's not that much further down that they can go. So potentially Powell was signaling to Washington the need for more fiscal stimulus and that monetary policy alone isn't quite enough. But we could get some tweaks to its asset purchase program. But it looks as though interest rates are going to remain near zero for a significant amount of time, at least until we see employment pick up again and inflation pick up again. I think basically Powell was making the point that, yes, we do have a potential vaccine on the horizon, but there are a lot of hurdles still to get over. There are still some challenges before we see the widespread implementation.
Now, I want to draw your attention to oil. A little earlier this year, around July, we had those flash crashes in oil prices, right? When there was all of this uncertainty over supplies. And now it seems like OPEC Plus is once again having trouble extending those supply cuts. What are we expecting from the oil market? How does that sort of impact all the other markets?
Yeah, I mean, it's been interesting to see the direction of travel for oil recently. I mean, it's gained about 33% in November, and that's on optimism towards the economic outlook. There is a lot of uncertainty around OPEC, some of its members not too keen to extend those production cuts. We're seeing a little bit of a pullback in terms of oil prices today, but broadly, we tend to see commodities like copper and oil as well rally in terms of how the outlook for the economy is looking. So if we continue to see an upward trajectory in terms of growth, in terms of positivity, in terms of market sentiment when it comes to the vaccine, it's likely that oil prices are likely to follow. But in terms of how that affects equity prices, I mean, if we see higher oil, that's likely to boost stocks within the oil sector like Exxon, like Shell, like BP. But higher oil does have a dampening effect for companies that have oil as one of its key costs, like airlines or travel companies. So it is a bit of a complex picture. Oil has been range trading for some time now. It looks as though we could be breaking out on the upside.
And that could perhaps drive some sort of sector rotation there, but we'll follow that as it goes. Thank you so much, Victoria Scholar.